Hey friends, how you doing? This is the 0DTE morning market analysis. Big news. Well, the CPI is cooling. We'll find out for sure in about 45 minutes when the CPI is released this morning. And, well, the bond market's begging. What the hell's going on? The economy's throwing signals, but the Fed, they're frozen. Deer in the headlights, clinging to credibility like it's 2022. What we're seeing isn't restraint, it's fear, and it's costing us. Now, we've got a CPI report due out, as I said this morning, that could print, softer. And again, just like the last two, really. Headline inflation is trending lower and core services are sticky. But we're clearly in a deflation mode. So why is the Fed still sitting on its hands? It's pretty much because they don't trust the data, and worse, they don't trust the market. In my view, they, in reality don't trust themselves because they know what frauds they are. I added that in there. And the bond market, though, is pricing in 2 cuts this year. The Fed fund futures are screaming for relief, but the Fed's broadcasting a completely different message. I think Jerome Powell said, "We'll cut when we feel like it, not when the market tells us to." What does that say? In other words, they are smarter than the market? No, they're not being strategic. Like I said, they're being scared. This isn't 1976, but Powell's acting like it is. Back then, the Fed cut too soon. Inflation came back and credibility was shot. So now they're stuck waiting for confidence. Instead of what they're really doing is they're ignoring reality and hoping we don't notice the stall out. And, well, quite frankly, everybody sees what cowards they actually are. Am I being too harsh? The fact is we do notice. Because as traders, we're living in real time, and the market is pricing risk, volatility, and opportunity today. And the Fed is playing reputational defense. So the real macro story this morning, the Fed isn't leading the market, they're shadowboxing ghosts. And while they do, they're leaving us traders, businesses, and the economy hanging in limbo. So that's a little bit of truth there. And they're not managing risk. They're managing optics. So for us, we keep playing the asymmetric edge. We're not afraid. We take wide flies, butterflies that is, tight entries, because while the Fed hesitates, opportunity does not. All right. So now let's get on to our morning market report. We're going to take a look at, I don't know if this is actually going to the charts, but we'll give it a shot. To the charts. Oh my God, first try. Anyways, we're looking at the VIX this morning. That's basically our playbook. Hopefully everybody can hear me because yesterday I made the faux pas of not having my sound on, but it appears as if everything is hunky-dory here this morning. Let me just check just to make sure. I got to go to my soundboard. What had happened yesterday was that I was away for the weekend. We went to Martha's Vineyard for Mother's Day, and while we were gone, there was a power outage, and it basically switched off all the equipment temporarily. Of course, my generator came back on, and I thought, okay, everything's cool. And I didn't look at my soundboard, and it had switched all the mics off. So there you go. Anyways, the VIX continues to drop. We're now in the lower third of the Goldilocks zone at 18.4 this morning. And that means that the width of our flies is slowly diminishing. Yesterday I was saying 25 to 35. Today I'm going to say 20 to 30. We have to take a look at the big ass fly this morning to see on what end of that spectrum we should be. I'm going to suspect that we're kind of in the middle. But let's take a look at it right now. Just got to move over to Thinkorswim. And yeah, we can see clearly the big ass fly is at 18 and change. With the CPI coming out this morning, this is a viable trade for us also, the big ass fly. We're looking for that volatility crush right after the CPI is released. Of course, the CPI isn't the main report that the Fed looks at. They are also looking at, let's see, hold on, just going back to TradingView. They're also they primarily look at the producer, the price consumer. Oh, I'm sorry, the PCE. That's their primary report that they're looking at. They believe that gives them the best information or handle on inflation, because it eliminates more volatile items like energy and food prices, which in the real world makes 0 sense, because you would think that energy and food are the two things that are primarily driving people's day-to-day needs. But the Fed doesn't think that way because they're not normal people. They're totally detached from reality. And instead, they sit in their ivory towers with their 400 PhD level economists, and then they spout nonsense. Do I sound cynical? Anyways, so we're 30. So we get back to 18. We're on the wider side of this, so we're closer to 30 wide in my estimation. All right, let's take a look at the directional bias. We are definitely pointing up as we're on this long reach here. We're above the moving average, and particularly and still on track with yesterday's gap up. Let's take a look at the market structure. So we moved up hard and then kind of moved sideways overnight. Haven't really made any kind of advances. Nothing happened since the European Open. In fact, we're kind of flat, maybe a little bit up. We could take a stab at maybe drop and bounce off of the Freedom node. That's the node that we broke out of that I said once we're over that, then it's just a matter of breaking through and into the top knot. I give these nodes names because it's fun. It doesn't mean anything. So I'm calling this node that we're trying to break into the top knot. That's the next stop before we go all in for the next all-time high. But there's a good chance that we could bounce off of the Freedom node here, and that's where we'll be looking for advances or our long butterflies off of any one of these here. So maybe up here or any of these. If we break through, I think that's going to be significant, and find our way up into the top knot node. Let's see what that looks like in the big picture. Here's the top knot. The top no, not the top no. That's bad. It's the top knot. Come on, get it straight. There we go. And only a hop, skip, and a jump before we get to all-time highs, as I said before. All right. So in terms of fat tail trades or tail risk trades, which we take on a periodic basis, let me get back to the big head here. And maybe what I'll do is I will do another segment tomorrow. I'm going to talk a little bit in depth. I can't talk this morning. More depth about our fat tail community. And I guess we're officially launching it this week. And then we're going to start doing some marketing push and get it out there and get people to know. But we haven't even really officially launched it. And well, I guess now I'm saying we are. And we already have 153 members. So that's good. It looks like people are finding some real usefulness in this strategy. Essentially, let me give you an overview of what this is about. And probably the best way is to just zoom in on the About page and just give you let's see here. Safari. Is that it? Yeah, there we go. So it's a school community. So there is a community and a forum and so forth. There are courses in here on tail risk strategies. This is what you're going to learn. It's a low-cost, low-effort option strategy that thrives on rare, explosive market moves. We look at a wide variety of what we're calling rare, explosive market moves. Yesterday was definitely a rare, explosive market move. And it was on the lower order end, but still lots of money to be made. So there are strategies that we have that were set up to take advantage of that, and we had members that made tons of money on that. Super low risk. I mean, so low that you never have to worry, ever, of your account drifting away. It just very rarely happens. It doesn't happen, quite frankly. And we're looking for these big things built on convexity, probability, and now AI. What I mean by that is that we've incorporated AI and some GPTs in there, which are like agents with ChatGPT. Not exactly agents, but similar. And they know all about the course and how to guide you through it. They know all about you, your trading, etc. It'll help you grow small accounts with structured risk, even while you sleep. In other words, these are set and forget trades. It's also at the further end of the spectrum of those fat tail strategies. They're really great for larger accounts that are looking for insurance. And right now, with volatility coming down, this is a good time to start building on that insurance because you're going to find that it's going to be super cheap. And so if you do have one of those existential risks events that are going to happen, you'll bank it big time. So no babysitting on trades. Trades cost as little as a few dollars to $35, maybe as high as $50 tops. And with a 30x, actually in reality, not a 30x times potential of that risk, but up to 100 times. So imagine putting a $50 trade on and making 100 times that. In fact, we had one trader just recently put a $130 quarterly trade on that made $6,200. And a wide variety of days out. So most of them are between 5 and 14 days. Some of them we are doing monthly. Some are doing up to 45 days or quarterly. And backed by theory, but simple in execution. I mean, super simple. You're not going to be laboring over what to do, how to take these entries. It's just super, super simple. And as I said, GPT coaches and an AI master. That's the other thing. We have a full AI mastery course in there. It'll teach you everything that you need to know about mastering your LLM, whether it's ChatGPT or Grok or Claude or whatever. All right. So it's all in there. You're going to love it. And back to the big head. There you go. There's my report for this morning. Thank you very much for joining me. Hope you have a great trading day. I think it's going to be a relatively calm week, but we'll see. The U.S.-China trade deal just got underway, so I'm sure there's going to be a lot of reporting on that and whether or not, how that is, received by the media. They seem to want to downplay it, but it is a big deal. The market is seeing that. Tesla took off. All's good. Anyways, we're going to be reporting more on Fat Tail as we go forward into this week and see what a remarkable strategy that is and what kind of efficacy that you have in doing that. Like I said, set and forget trades, super low risk, huge potential, but you really don't have to sit there and babysit it. So if you have a job and you want to get into trading in a more active way, this is definitely the way to go. Plus the education that's in there is second to none. And there are 2 live sessions every week. So check it out. It's at Fat Tail under School Community. School.com/fattail. All right. By the way, this report was brought to you by Fat Tail. So that's it. Thank you very much. Have a great trading day. Coach Ernie is out.